This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Blockworks Digital Asset Summit, which is crypto's premier institutional event, is back in London October 13th to 15th. It'll have speakers from leading global funds, financial institutions, DeFi protocols, crypto companies, and policymakers. Think BlackRock, Circle, Coinbase, the UK Parliament, Jito and Marinade, all under one roof. Notable names include Joe Lubin from Consensus, Hadley Stern from Marinade, Rebecca Reddick from Jito Labs, a whole bunch of Blockworks folks, and more to come. There's a VIP dinner October 13th, open to speakers and VIP ticket holders only. That will sell out, so act fast. And it's all going down at Old Billingsgate, London. Use the code LIGHT100 for £100 off at checkout. We'll see you there. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by Robin A., founder and CEO of Raiku, a Solana transaction infrastructure company that just announced a $13.5 million fundraise led by Pantera. Robin, thanks for coming on the show.
Thanks for having me. Excited.
Yeah. It's fun to have you on. I think we first met back at Solana Accelerate in May.
We did, didn't we? At the office, Blockworks. I remember.
The Blockworks HQ here in New York. I'm not there today, but one day we'll do a podcast there. But I remember back then, you guys kind of pitched me on Raiku, and I was a little confused with what it was, but it seemed cool. It seems like Raiku is just, when you announced the fundraise and there was a lot of attention on the project, I think there's a lot of interest in what exactly this thing is. What it is like comparable to in the current Solana world and what unique problems that it solves. So maybe just on that point of messaging, what is Raiku?
Raiku solves a fundamental problem all L1s have, which means when you send a transaction today, you're hoping for the best. We make that predictable, so you know that a certain event will basically happen in the future. So predictable, guaranteed, and fast. That's Raiku on a high level. And then we enable new ways of building applications, pretty much.
And maybe before we go too much further, to establish like why this is important, because we can get into all the ways that Raiku guarantees that you can land your transactions on Solana, but why is it important to have that guaranteed inclusion?
So it kind of takes me back to why we started Raiku in the first place. Been in crypto for a while, since late 2015, most of it, to be fair, in Ethereum. And then I made a switch over to the beautiful land of Solana in 23. But the motivation was honestly quite simple. I saw a lot of infrastructure projects across different ecosystems. They weren't really bringing anything new. And by new, I mean, let's establish great primitives or products that enables, new use cases, new industries to operate on chain without it feeling like you're downgrading. So, for example, you're a TradFi firm and you operate trading strategies and it works well because it's fast, it's scalable, fantastic. You can't really do that on chain. And if you can't do that, how can we, show the big world how beautiful on chain is? So you need to facilitate that. But that's difficult because most distributed systems or L1s, they're not built accordingly, or they don't take certain first principles into account, which makes that difficult, right? That's why we started Raiku, and specifically those first principles are information can't travel instantaneously across the world. Not all applications need access to a shared state at all times, right? So you can have optionality. Locality also matters, basically where you're at in the world to where the computation happens. And then an outcome can't be guessed, but it has to be guaranteed. It has to be predictable, right? So those are kind of the 4 first principles that we built Raiku around.
You mentioned being in the Ethereum ecosystem for 7 or 8 years. Was the primary reason that you switched to Solana just the scalability thing and the fact that the Ethereum L1 really has not proven that it can scale to this point?
There's a lot of reasons. So first, the thesis was very simple. We know that if you want to squeeze the juice, if you want to, get power off a system, reach the optimal state, you need to do some computation off-chain. Some of it can be on-chain. But that has to be done in a very particular way. Otherwise, you will get to loads of fragmentation, incentive misalignments, etc. We've seen that, happen in Ethereum. So the thesis was, okay, every system which is built on a fundamental network will be limited always to its limitations. So let's look at other, networks, other L1s, which is more powerful, newer, has solved some of those fundamental problems that maybe Ethereum haven't, right? And I looked into Solana, Aptos, Sui, and a few other networks. So I didn't go straight to Solana, but rather did an exercise to see where the most potential is. And Solana stood out for many, many different reasons. One, it has survived a couple of nuclear events, right? And that has made the community, amazing. It's everyone is on the same page, mostly. There is not much noise. There's a lot of signal. Leadership in Solana is, I think, very effective. They tend to focus on the things that matters. They have a good vision. And the technology stack, it's maturing. And when the stack is maturing, it has reached a certain state where you can start to optimize, bring in new novel primitives, right? Because you can't do that on a stack that is changing every day and is having fundamental issues. So yeah, those were the reasons really that we went for Solana. And we were lucky enough to work quite closely with Super Team, especially Super Team UK, and with some support from the Solana Foundation as well, to look into, what can be done here. So yeah.
And so just to close the loop then on why this is why guaranteed transactions are important. I would think that if I'm just a user, trading on chain, it's not quite as important. It's maybe nice, but it's not quite as essential that I have guaranteed inclusion and or guaranteed block space, I guess. But if you're an institution, there's like these, very minute differences in risk can be a really big deal for you. And so it would actually be quite important to an institution to know that they can get access to block space when they need it. And if an institution is going to, be doing real financial services stuff on Solana, it can't really, it would be very bad if, the chain became incredibly congested due to some kind of meme coin launch or something. And so guaranteed transaction inclusion is more important for the institutional side, I would think.
Yeah, absolutely. It enables a whole lot of new use cases. But if you look at the current landscape today, about 75 to 90% in edge cases of transactions are being, aborted, rejected, which you can classify as high frequency trading. think, for example, trading bots, etc. This creates a vicious cycle where high value transactions, which is of high frequency, spams the network, right? And that hurts the average Joe, and then it gets worse and worse, and that's how congestion happens. So you can avoid all of that mostly if you can say, well, actually, whatever you send, that will happen. So you don't need to constantly guess. You don't have to be optimistic, right? Which should exponentially improve the current state of the network today. When it comes to institutions, traditional finance, yes, having this sense of predictability will certainly unlock quite a bit, and with that comes precision and a guaranteed outcome. Think if you're running a strategy on your server, you're a hedge fund. That strategy runs consistently, 24/7, and it gives you a signal. It says, "Hey Jack, I think this opportunity 30 minutes from now looks very credible. Have a look," right? Okay, cool, great. So you monitor the chain, and 30 minutes have gone by, and it looks like a really, really good opportunity. Now you try your best. You send it as soon as you can into maybe someone that provides JIT or other tools for it to land very, very fast. And most likely you'll pay a lot for that, but you're not guaranteed that will happen, right? Now, what we do is that you run the same strategy, you get the same signal, let's say 30 minutes ahead. Now you can reserve that. You can reserve that spot in the block, a ticket, some block space. And what that gives you is a credible commitment, right? It gives you pre-confirmation to say, okay, cool, run your strategy. If you think that this opportunity is a great one 30 minutes from now, send me whatever you have. But you know that this will happen, right? So now you have this guarantee and precision. So I would say that's a high-level example of institutional use cases. And keep in mind, this is programmatic. So it's not like you log into a dashboard and say, hey, I want to reserve this spot, like you buy a train ticket. You can do this consistently throughout one block, multiple blocks, a particular sequence of blocks, etc.
Katana is an L2 built for DeFi, and it's pioneering the ecosystem category of productive TVL, believing that change should be graded on how efficiently assets are put to work in DeFi, rather than just total value locked. In just a couple months, Katana has surpassed $500 million in TVL, with over 90% of that TVL being productive in ecosystem on apps like Sushi and Morpho, which also receive boosted yields from Katana's unique Vault Bridge design. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added Vault Bridge yield, and other chain revenue. Major app launches will be coming down the pipeline in the next few months, with incentive campaigns for the Kensei Memecoin Launchpad and Perpstex partners for Katana. With the launch of Katana's chain-wide V tokenomics model, VCAT holders will be at the middle of the Katana flywheel, directing emissions and earning fees for their votes from partner protocols. Thanks, Katana, for making this episode possible. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. That's a good kind of window in to why this is all important. I now just want to dive into how exactly is this happening. So maybe, Robin, to make sure we don't lose people too much here, talk at like a basic level about how the transaction lifecycle works today. Like if I'm, just a regular user transacting through Phantom, trying to land trades on Solana, how does that work today? And then how is Raiku going to change that?
Yeah. So
and will users even consciously know they're using Raiku? I'm assuming not.
No, they won't. So to the question, will users know consciously if they use Raiku or not? No. So the application is the one that integrates to Raiku, and an application can use Raiku at the same time as using, the normal methods as they have today. So the applications have optionality, and that gives powers to the users. Great. When it comes to the normal transaction lifecycle today, you send your transactions to a provider who will then submit that or send it further to the current leader of the network that will produce the block, right? The probability that the provider you're sending this transaction to has a leader which is in close proximity of them is relatively small. Now, what Raiku does is that it significantly increases the probability of the leader being very close to where you send that transaction. So that's part of why this is faster. In fact, you can look at it high level and say we increase the chance by 33% that the leader is close to you. So that's it on a high level. Did that help?
Yes. And I guess to move beyond the high level, so Raiku is a kind of sidecar that works alongside Jito or the Jito Agave client or Frankendancer. So it's this kind of additional piece of infrastructure. No, that's incorrect.
No, so there is two primary components of Raiku as of today. One, you have the sidecar, which is compatible to two clients. One, Agave, which comes from Answer, the core client of the network, and then Fidancer. The Fidancer version of our sidecar isn't complete yet, but it will be on mainnet.
Okay.
So that means that node operators or validators have two options. You can run your client, either Agave or Fidancer, on the network, and that can also be on 00 if you would like, with the Raiku sidecar. Now, what the Raiku sidecar allows is for that validator, for the node operator to then communicate with the Raiku node. And the Raiku node is a network of separate nodes in clusters spread across different regions of the world that acts as the main brain behind all of this, really. So it enables the marketplace, it enables the different block space products or transaction types. And that's where the magic happens, essentially.
And with these guaranteed inclusions, it's basically a pre-confirmation, right? That's the way that you make it happen on a granular level.
Yeah. So a pre-confirmation is essentially a ticket that you get from reserving block space ahead of time, pretty much. There is various versions of it, but yeah.
Maybe talk more about how that's actually handled. Like how is it the Raiku node network that is deciding whether these pre-confirmations are granted and determining kind of the scheduling there? It seems to me like that would be a pretty complex task to handle.
It is. It's difficult. So first of all, Raiku isn't really deciding who gets what, and it's not like a authoritative player. The entire thing is based on free markets, pretty much. So what I mean by that is the sidecar communicates with the validator, right? Because it's one and the same. And it says, hey, how much block space can we potentially reserve? Let's say 25%, 50%, doesn't matter. Okay, so the validator says, okay, Raiku here is 50%. Great. Now we know what block space we can sell. And typically we know that 2 days in advance. All right, so then we take that block space and we split it up into many different tickets. Tickets that the applications can buy, right, from the marketplace. That can be 6 hours in advance. It can be an hour in advance. It can be a minute in advance. Now, once you buy that ticket based on the market dynamics of the marketplace, with the fees, etc., then you get that ticket, that pre-confirmation, right? That is held in your name on the application behalf. Now, depending on what the time horizon is, so let's say you booked the ticket 30 minutes in advance. Now you know that, okay, I own this ticket, I own this block space, which means you can wait to send the transaction that you want to be included there. You can wait all the way up until 1.2 seconds before the block is produced. So n minus 2 or 3. It's n minus 3. Once you send that transaction to Raiku, the Raiku node, that's then forwarded directly to the network, to the leader, essentially. So this is how it happens from like a transaction lifecycle standpoint. And all of this is fully compatible with the current Solana SDK as well. So we don't really introduce any new, changes to the way developers have built applications or send the transactions directly, because that's important. We don't want to introduce more complexity. It's already complex enough. Yeah. Did that answer your question?
I've also seen it cited that Raiku aims to achieve like sub 50 millisecond pre-confirmations, which for context, that's, like a 20th of a second, I guess. A Solana, the Solana block time is 400 milliseconds. So it's 1/8 of the Solana block time. So how do you achieve pre-confirmations that quickly?
Yeah, good question. So it's about high level. It's about how many validators have adopted Raiku on the network. So let's say 10% or 20% of the validators or stakeway has adopted Raiku. That means we can produce X amount of blocks per, epoch, which translates into, coverage or stake-weight ratio coverage, which essentially gives you a answer on how many blocks you can produce and the consistency between those. The pre-confirmation and how fast we can send that out depends on where you as a buyer is located and where the Raiku node and the validator is also located, which is why it's very important to have the Raiku nodes distributed across different regions of the world. So let's say we know that there's a lot of buyers in New York, definitely place some nodes there, right? Today, Solana has one leader and it's sequential. That's going to change soon, where you will have multiple builders in different regions of the world, which means we can optimize even further for this 50 millisecond pre-conf to be even faster. In fact, we think we can get it down to 30 milliseconds as of today. But imagine if MCL or multiple concurrent leaders goes live. Beautiful. That's going to be even faster. So high level depends on where you're at in the world, but we will optimize for that all we can. And that means you can receive the pre-conf 50 milliseconds, pretty much. Yeah.
And, you mentioned that a big piece of this is how many validators actually choose to adopt Raiku. In some sense, that's the ball game for Raiku, is you have to get validators to want to use this. I would think that one of the ways you do that, and this is a window into a larger conversation I want to have, is economic incentives. Like this is because you're renting that block space off of validators, to how I understand it. It's bringing in additional revenue for those validators, and then you kind of auction off the block space. So is that a correct understanding? Like it's basically brings in additional revenue for those validators who choose to run Raiku?
Yeah. So You're absolutely right. Raiku is dependent on having X amount of validators using us. But then the question is, okay, why would they use Raiku? It comes down to economics. Validators need to have the most competitive returns for their stakers. Makes sense. How do you do that? Well, demand. Demand on order flow coverage of the total transactions that goes on the network at any given time. The question is then, okay, how do you get that order flow coverage? Well, the products, the features, the pros has to be so powerful, exponentially more powerful than what you have today. Because as a builder, you will then look at this and think, oh shit, if I don't adopt this, I'm going to be outcompeted by every single competitor I have. So the primitives of Raiku has to be very, very powerful, which comes down to the pre-confirmations and the predictability you get, the control, and the new ways you can now build. That's the most important thing. Be aligned with the builder, the customer. The validator, they just want to see demand, because that means returns. And specifically for the validator, today they are selling one product, and that product is block space. Block space, which is equal for everyone. But, we know that a blockchain is covering many different verticals. So, application requirements for, let's say a high performance, trading application down to payment application, they're quite different. They require different things. And what Raiku allows is you take this, uniform block space that the validator is selling today, and you split it up into different products, different revenue streams. And those products have different features that suits various different, verticals, use cases. And now you can start to specialize, right? And those products comes at a premium because some are more sought after because of various reasons, right? Use case specific. So ultimately, to your question, why would a node operator or a validator adopt Raiku? It's simple: economics, returns. And this is going to be, I think it's going to be really interesting to see how the network develops, because the underlying block production incentives for node operators today is changing. And it's changing fast, which means, and I'm basically referring to the various different SIMDs that is targeting this. But what it would mean for node operators today is that they need to attract more stake, because more stake equals, a higher say into what goes on the network. And then you get more order flow, which means more money for you. The question is, how do you attract that stake? In order to attract a lot of stake, well, you need to provide a good return for your stakers. And Raiku allows that, because he allows validators to differentiate on various different markets, depending on the node operator's expertise, right? So, it goes full circle.
All right, listeners. If I look a little differently than I did a minute ago, it's because we're having some technical difficulties on our end. So some time has elapsed as we resolved that. But Robin's been a great sport, agreed to continue on a little later in the day. So Robin, appreciate you. I won't take up too much of your time here, so I'm just going to dive right into the question we had teed up before everything went haywire a second ago. I want to talk about validator revenue. As you can see, the aggregate amount, it's about 10 to 15 million per week. That's about where we were in mid 2024. It's below a kind of spike that we had in, November, December, January, as there was this post-Trump election euphoria throughout crypto.
Yep.
And so if we look at kind of just on a percentage basis today, here's how the validator operator revenue shakes out. So last week, we saw about 65% from transaction fees. So that's things like base fees, an extra priority fee that users can pay to get their transaction included, issuance, which is the network sort of creating SOL inflation to reward validator leaders. And then there's Jito tips, which are only about under 5% of the total. So if you're a validator today, to simplify this, most of your revenue comes from transaction fees, which are like priority fees, base fees. A 30%, a smaller amount comes from issuance, which is sizable, but it's declining over time, as we know. Long term, that number is going to get smaller and smaller because there's this kind of decay curve that's coded into the network, and a small amount comes from Jito tips. So just looking at this chart, Robin, explain to me, your thoughts on validator economics and revenue today, and how could Raiku potentially be a boon for validator revenue on Solana?
So what we're looking at here is the current situation. That's going to change. Why? Because there's a number of SIMDs out there, which will change the overall incentives for validators to build blocks to participate. It's going to become harder, more competitive. You showed, it was 5% of G2 tips that the validators earn, like roughly. That's as of today. Roughly, we know that can go up to 30%, but it depends on the demand. It depends on demand at any given time on the network. So where validators today are squeezing the juice, earning more money than what they could, that goes from 5% up to 30%. But on average, we know that the block space that a validator sells through Jito today is roughly 3 times more valuable. 3 times more valuable than the other block space that they sell to normal users. And why? It's because it comes with the JIT market that Jito has today, right? Now, imagine if you enable many more markets, many more products that the validator can sell, not just JIT, but AOT and various different products in between as well. Now that becomes interesting because you're facilitating for many different markets, right? That comes with their own premium, own price. And all of this is dynamic according to market demand, by the way, which means it's fluctuating. So you're not really setting a set rule that dictates how the market works. It's the entire thing behind the Raiku marketplace is designed on exactly free markets. So to your question, all right, validator today will be able to sell more than just one product via Raiku. This is as of today, without many changes, on the incentives of how node operators earn rewards, which means that their revenue sources increases in number, and with that also the premium that comes with it, aka the revenue. But it's much more than that, especially in the long term, because we're positioning the node operators to be a lot more competitive to increase their stake. If they can increase their stake, they get a bigger say on what happens on the network. That means they get more transactions that they can handle. That means also more revenue. So it kind of goes full circle. It's also important to take into consideration that we have Alpenlow coming up on Solana. There are projects like 00, which also strengthens the validator or node operator's position to perform even better. Combine that with Raiku, happy days. So overall, we're positioning the validator set and hence the network to be a lot more robust. And this is important because running a validator is hard from a operational standpoint, because you're always subject to, obviously market demand. So you don't know what your revenue will be in a month from now or 2 months from now, and it makes it even worse when, we've had recent SIMDs out there or proposals that says, well, let's make the network deflationary. That stresses them out. Now, Raiku has this market where you can pre-purchase or reserve block space ahead of time. Now, that's futures, right? There is a reason why future markets exist in all mature commodity markets, energy, oil, etc., because you can build a lot of primitives on it, financial primitives, which enables you to run your, node operator validated business in a completely different way because you have more control. You know a bit more on what will happen in the future. And that's desperately needed. And all of this, I think it's worth taking into consideration that since Raiku will offer, all these various different products that bridges the gap between the two different realms of, Web3 or Web2 and Web2, we're also expanding the market and allowing the validator to participate in that economy, which is overall good for the network, for the users. Happy days. I'm not sure if that answered your question to some extent, but we will publish a market mechanism paper roughly in a month and a half, which goes into detail on how all of these mechanisms will work across the various different products that Raiku enables on the marketplace, essentially.
Mm-hmm. Are you planning for there to be like a Raiku token that these rewards will be denominated in, or is it all going to be in Sol?
Yeah, excellent question. So we know that a Raiku token is fundamentally needed in order to coordinate different machines of the Raiku network. You can look at a Raiku token in a very similar way that you would look at an L1 token. There will be Sol involved, that we know for sure. What the ratio is, though, we're not entirely sure yet. Now, this is something that we're looking into. So, for example, when you reserve some block space, will that be 50% Sol, 50% Raiku? This we're still hashing out. But what we do know is a token is fundamental to the network. It is fundamental as well because it will have many different sources or areas of utility. So basically all the different products that is sold via the marketplace have individual utility needs, essentially. So what I'm saying here is it's not just another governance token, right? So this is coming, and it's coming very close to mainnet. So first we'll go mainnet, then we're planning to then launch this token right after. Now, exactly what that will be, like a week or 2 or 3, I don't know. Well, that one we'll figure out.
Katana is an L2 built for DeFi, and it's pioneering the ecosystem category of productive TVL, believing that chains should be graded on how efficiently assets are put to work in DeFi, rather than just total value locked. In just a couple months, Katana has surpassed $500 million in TVL, with over 90% of that TVL being productive in ecosystem on apps like Sushi and Morpho, which also receive boosted yields from Katana's unique Vault Bridge design. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added Vault Bridge yield, and other chain revenue. Major app launches will be coming down the pipeline in the next few months, with incentive campaigns for the Kensei Memecoin Launchpad and Perpstex partners for Katana. With the launch of Katana's chain-wide V tokenomics model, VCAT holders will be at the middle of the Katana flywheel, directing emissions and earning fees for their votes from partner protocols. Thanks, Katana, for making this episode possible. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Interesting. Some alpha for the pod today.
Alpha.
So I think another thing that interested me in Raiku is that it seems like there really is a trend where all of a sudden, or maybe not all of a sudden, but increasingly in recent months, we're seeing more and more teams building in this area of transaction landing, transaction inclusion, scheduling, this kind of thing. Some that come to mind are Jito's BAM, their block assembly marketplace. You have Temporal, Paladin. Sanctum has a new product that was interesting. We just had them on a couple weeks ago.
Nice.
I think you've said in some coverage by the block that you see Raiku as being most similar to BAM from Jito.
Yeah.
Why is that the case? I just want to situate Raiku within this broader landscape of a lot of people on Solana seeing that transaction landing is like a big problem, and also potentially a good business line as well.
Yeah. So yes, there are many projects that is either currently operating in a similar area that Raiku is, or that is coming. And the reason for that is really simple, is those first principles that I mentioned early on. It makes sense. It's kind of what you have to do if you want to scale. The reason why I say Jito BAM is the most notable and respectable player out there is simply because of their market share, right? Now, it's important to take into consideration that Jito BAM is a separate product and it's new than the current version of Jito that you're seeing today. The reason why I say that they're the most notable is we share a lot of similar goals. So, for example, Raiku says that we will allow you to achieve predictability, precision, and speed. And we allow for that if you are purely an L1 application, or if you would like to utilize some off-chain components. Jito BAM kind of says the same, but in a different way. So their architecture is different. The way they basically want to achieve this goal is different. Now, that's why I say, they're the most comparable out of the projects out there. But there are many other projects, you mentioned some of them, which have realized that, in order to squeeze the juice to, develop a much better product that can facilitate, new markets, they have to work at a lower level. And lower level, I mean, you need to have a lot more control over the application logic, how the transactions are sent, what the communication line with the validator is. Now, this is the reason why I was raving about, Validator plugin marketplace for like a year ago, because it makes sense that we need to go that route for applications to, be a lot more low level and in control to merge different architectures of off-chain versus off-chain. And this is what we're doing. But yeah, Jito BAM is doing it in a different way than us. And they both have their pros and cons.
And most of these products, I would think, kind of are built so that they can run alongside the existing Solana Validator clients now, I guess. But clients. I wouldn't think you would run. Yeah, you wouldn't run two of them at one time. You would only do Raiku or Jito BAM, for instance, is what I would think.
So, well, you can do many different things, to be fair. Like, you have optionality. We do know that you can't run the Jito BAM client and the Raiku sidecar at the same time. And it's really simple. Mm-hmm. Jito BAM will produce 100% of the block content in the BAM node, which means there is no way of collaborating. There are some other ways in which you can have a validator type of ping router service, and we're looking into that. We think we'll propose it to the Solana Foundation because we think it makes sense for the ecosystem. What was my point? No, you can't run both at the same time. However, when network slashing becomes live, we have seen that it makes sense for a node operator to take, let's say, their one node today and split it up into different nodes, different stakes, because you diversify your risk exposure. Simple. You diversify also the various different revenue streams according to the market demand at any given time. So that's what you can do, right? You just split it up into two nodes instead of one. Yeah. Did that answer your question?
Interesting. Yeah. So there's a world where people run half their nodes in Jito BAM and half in Raiku, or you split it up further with Sanctum and Temporal and all these, because if any of them have issues, at least you have some that are reliably landing transactions.
Yeah. Again, right? You have optionality, and we're also thinking to push this routing service to the node operators such that they don't need to choose that much. Basically, this routing service would promise that the node operator would build the most rewarding block at any given time. I feel confident enough that Raiku is a good product, so hopefully we'll win most of those. But let's see. But yeah, there is optionality.
So it's almost it's like a DEX aggregator for transaction landing in a sense.
Yeah, pretty much an aggregator of order flow and who does what. Yeah.
And this is sort of similar to what Sanctum is building as I'm sitting here. Like FP talked on the pod about some kind of like router service for transaction inclusion.
Yes, but that is on a different level. That is one level up. Because let's say, and by up, I mean applications, applications, they can integrate with many different service providers. One of them is Raiku. But what's best for the application in one instance might be different, 3 seconds later. So it makes sense to have a router which is routing the transactions to the different service providers, which is best for them at any given time. So yeah, it's a fantastic initiative that FP and the wider Sanctum team is working on. And I think there is some good room to do some good stuff together.
How do local fee markets play into all of this? Because that's a, more Anza, like core Solana protocol level feature where essentially, for those who are unfamiliar, local fee markets are meant to create a world where the amount of fees that you pay to transact on Solana are limited to like the type of state that you're trying to touch. So practically what that means is say Trump releases the Trump coin. If you're trying to transact with the Trump coin, you may pay elevated fees to be able to land a transaction because a lot of people want to land that transaction. It's very competitive. But if you're just, I don't know, swapping SOL for stable coins, you're doing something over here that's not a competitive trade. You won't experience that congestion or those higher fees because the local the fee markets are local; they're not universal on Solana. So this seems like it sort of gets at the same issue Raiku gets at. So I'm just curious how those things go together in your mind.
Yeah, so it helps us inform state contention. So they work together pretty much. It allows you to prioritize what should happen at a given sequence and when, essentially. So yeah, it helps inform Raiku more than anything.
But it's not like the same, I guess, level of the transaction infrastructure. So it's not like if local fee markets get built really well, does that obviate the need for Raiku? I guess is what I'm getting at.
No, we receive this question in various different forms quite a lot. And it makes sense. Like, what if Solana becomes, it solves all of the current problems that it has and it becomes even faster, even better, and it will. We know that over time. Will that mean that Raiku is obsolete? The answer to that is no. Because what is the fundamental problem or need that we're solving, right? We know that it's the ability to predict ahead of time with the guarantee, but also with beat the market. Now, beat the market doesn't matter if it's 400 milliseconds or 10 milliseconds. You just want to beat the market, right? So it doesn't really matter. It goes hand in hand. It's synergetic. So the faster, the better. IBRL. Let's go.
Well put. Well put. IBRL betters, for if Robin would say it in this episode, are very happy here. Robin, that is most of what I wanted to ask you about. I guess, it's been a bit of a snafu with recording a couple of times and everything. So I kind of just want to end with is there anything important that you think listeners should know? People who are unfamiliar with Raiku, or maybe are still wrapping their head around what this project is. I just want to give you this chance because we've had such a weird recording session. But is there anything else that we should know before we sort of wrap here?
If you're a builder, I would love to hear what your requirements are, what your pains are today, what frustrates you the most. Simply because then we can ensure that we meet the current demand of the market. Pretty much. So reach out, please. DMs, Discord. We host weekly sessions on Discord, by the way, with developers to just hear them out. And I love to jump on calls with founders. That's my bread and butter, to see, what good stuff we can do. So please reach out. Any questions you have.
Please reach out.
Exactly.
Thank you all.
Thank you, Jack,
for reaching to the end of the episode, if you made it this far. Before I get into my closing sequence, though, Robin, yes, thank you so much for taking the time. It's been a really fun episode, and excited to just sort of see Raiku be released into the wild and how this kind of changes the market microstructure on Solana. I think it'll be really interesting to observe how this trend goes down over time.
It will. Exciting times ahead.
Once again, to all of you who made it this far in the episode, we really appreciate you. Thank you for bearing with us a little bit. If you enjoyed this episode, we'd love if you gave it a like or a 5-star review wherever you get your podcasts. Please share it with a friend, and we will see you all again very soon.